How's it going? Welcome back to my YouTube channel. In today's video, we'll be talking about market structure and also reading price action correctly to identify your daily bias so you can get into intraday positions, know where your entries are, your exits are, get in and out of the market, and go about your day. All right, so hopefully this video helps all of you who find it difficult to understand market direction and order flow. We're gonna go straight into it. I have GBP USD pulled up. This is the 4-hour time frame from last week. So we're gonna break it down from higher time frame to the intermediate time frame and then the lower time frame. Find some trade ideas that took place, and I'm gonna show you guys how I do it. Some of these trades I actually took them last week. So let's get right into the video. On the H4, we can see price is bearish, right? This is the H4 high, this is the H4 swing low, and price broke this low right over here, meaning price is bearish. The fact that price is bearish doesn't mean we need to be selling price. We actually have to understand where price is so we can tell where it came from. And with these two information, we can then find out where price is currently headed. So yes, price is bearish overall, but if we're looking at price action, this is where price is right now, right? It's coming from the H4 low, right? So if we're to go deeper into the time from like the 15-minute, we would see a bullish trend, which would be the pullback of the H4 bearish trend, overall trend, okay? So don't get confused. We're gonna draw it out so it makes sense. And then in terms of like selling and buying, this is the H4 trend. So if we're gonna mark the high to the low of price, we want to sell from a premium supply area, right? When you drop the fib tool, I like my zones to be, you know, in the 70%, 78, 80% range. That is as extreme as I want it to be, okay? So let's just mark price action. We're gonna say there's a breakout structure right here. We have our H4 high up here. And we have our H4 low down here. And there is a supply zone. So we're gonna mark this up as H4 supply. Now, other things I look for in terms of validating my supply and demand zones is whether or not price swept liquidity before creating that zone, and if there is an imbalance next to it or internal liquidity or inducement next to it, right? These factors validate my zones, okay? So let's take a look. As you can see, we have a sweep of price action, a sweep of liquidity. And there is this inducement over here. There is a supply zone here. I wouldn't sell from this zone. I see it as inducement. And of course, there's liquidity in here. So there's a lot of factors that actually validate this supply zone. So this is a textbook market structure, okay? So now what is our daily bias? Well, we have to go to the intermediate time frame to find the daily bias. And this is something I do every single day. Let's go into the trading plane to make sure we're doing things correctly. So in terms of my checklist, on the higher time frame, I have already identified my structure, my bias, and I marked it up, right? Price is already mitigated an H4 POY, which in this case is the H4 low, right? So we're gonna check that off. And now we're gonna drop to the intermediate time frame, which for me is the M15 or the 10-minute time frame. So let's check it off and let's go straight to the 15-minute. All right, what do we have here? So this is the H4 low. All right, bear with me. We're gonna mark this price action together so we can understand where price is, where we are in price. This is the last low that price ended up sweeping, correct? Which would make that a sweep of liquidity. This was the M15 high that price violated, so we can call that our change of character or our shift in market direction. We've got that. Well, when price broke this high, it pulled back. It didn't pull back all the way, but it's fine. We're just gonna mark this up as the pullback, all right? So let's call this M15. Now, what do we have here? We do have a breakout structure here. This is not a major breakout structure. I call these minor breaks, only because the low that broke this high was violated, but it did not change direction. We're still in the same bullish internal structure trend. So just keep that in mind. Now let's just mark the other parts of it. We have our M15 high, And we also have our M15 low. So let's call this M15 low. Now, what else do we have? All right, let's look for a zone we can buy price from, because we understood internally we are bullish, so we want to look for buying opportunities. So this is it. We have this perfect looking demand order block. So let's mark it as our M15. We've got that. Now, what is here to validate this zone? It's in the extreme range of the M15. It's in the extreme discounted price zone. There's also an imbalance right over here, which would validate this zone for me. Okay, M15 imbalance, right? And there's this Asia session low, which is also liquidity, right? Asia session low is liquidity. So there's enough validations for me to buy price when price mitigates this M15 demand. All right, so let's go to the trading plan. So let's see what we have. We wait for price to break structure with momentum, creating an imbalance, right? We already drew this up, right? And then what else do? We want to mark out that order block on the M15 time frame. And again, in terms of validation, this order block is in the extreme range, right? It's in the discounted zone. This order block also has an imbalance and liquidity right next to it, which validates it. All right, so we're gonna check it off. We got that. So the next thing on this checklist is, once price mitigates that M15 zone, we want to either take a direct entry, right, from the M15 and target your highs or your lows, or we can use lower time frame confirmations like M1, M2, M3, M5. That's what I use. So now let's go back to the chart and let's play price until it mitigates our area. All right, so price has mitigated this area very nicely, right? So let's check it off. Now we can again directly take an entry right here and target our M15 high for a beautiful 1-to-4, which is an awesome risk to reward ratio. Or for additional confirmations, we're gonna go to a lower time frame, which is what I'm gonna do here. So on the lower time frame, again, M1 through M5. So let's just use the 2-minute time frame in this situation. Let's go into the 2-minute and let's see what we have. All right, so let's draw this up again. So this is the last low, right, on the 2-minute that price broke, which will make this our liquidity sweep. All right, so let's call that a sweep. And then let's play price again and see what price gives us. All right, now this high right here was the one responsible for breaking this low. So if price violates this high, we have our change of character, right? So let's mark it up as the change of character. Got it. So now let's mark our order blocks to buy. Okay, so we have our high, our low. If we want to use the fib tool, this is the low and this is the high. Again, I want to buy price from zones that are within this range. So I'm going to mark this up as my zone. Okay, and we're going to call this M2. I'm going to call this liquidity. This order block here, I wouldn't buy from that. I'm gonna call it a liquidity area, right? Again, this to validate my area of demand. And this is an order block you could buy from, but it would be used as an inducement for the one beneath it, okay? We're just trying to find the best zones to buy price from. So let's go to the checklist. We identify price swap liquidity into the M15 order block, right? This is it. This is M15 zone, that's liquidity sweep. I'm gonna check it off. Wait for price to break structure, creating an imbalance. Price already did that, right? We broke this structure. We have an imbalance over here. We have liquidity and inducement. It makes sense. And we're gonna mark up that M1, M2, M3, M5 order block. We're on the M2, we already marked it up. So now what else do we have to do? We just need to execute this trade from that zone, and then follow your risk management rules. So in this case, let's say we're risking 1%, which is what I usually do. We're gonna put our buy limit up here, down here, okay? And then let's just target some highs. Let's use the M5 and look for some highs. We can target all the way to the M15 highs, or we can just target someplace else. It doesn't really matter. Let's target this M15, sorry, this M5 order block, for instance, next to the Asia session. Call that M5, and let's use that as a target area. All right, back to the M2. Let's see what we've got, okay? Gonna play price. Okay, so we are in the M2 zone. All right, so in this case, you'll be in your position. Now, in case you don't use limit orders or you want to wait for extra confirmations, you can use extra confirmations. So let's see. For instance, this next candle is a bullish candle. If it didn't take this trade like this, let's look for the next candle. It pulls back a little and it keeps on going. So if you want to hop into the trade just like that or wait for additional pullback and enter the trade, that's fine. I always tell my team members, be creative with your entries. You don't always need to just take the order block. You can be creative with it. So in this situation, since price is pulling back after creating this this bullish momentum candle, I can take another entry from there, right? Based on candlestick confirmation. So let's see what the next candle is. Price comes back into it. All right, and I have a nice bullish engulfing, so I can take this next trade like this. A long position, right, with my stop loss below it, that's fine, and then the same target. All right, there's a lot of different ways you can enter the trade. You just have to be creative with it and make sure it makes sense, of course. All right, we're just gonna play price. We're not even gonna worry about that. So let's see where price leads us to. Okay, so we're still drawing down here. Let's go to the M5 so it could be a little faster for context. All right, let's see. All right, so price ended up pulling back all the way. Our target was not hit, but let's keep on going. So let's keep on going with this trade idea. Let's see, our target was not hit, okay? But for context, if you were managing your positions correctly, moving your stop loss and profit, you might have secured some profits. But I'm gonna delete this out. So let's just say we took an L. That is fine. Let's go back to the M15. Price has come back into this M15 zone. So what do we do next? As long as price doesn't break structure, right? It's still a valid range. This is the M15 high. This is the M15 low. This is our M15 order block. As far as price does not break this, we're still valid, okay? So we can delete this price action. Our first entry did not hit TP. I'm gonna go back to the lower time frame. We're gonna repeat the same process again, okay? So let's see. Let's go to the M1. Again, let's get creative with our entries, all right? So this is the M15 low. Remember, we still haven't broken past it. Let's see what price ends up doing. Okay, let's just read price action carefully. Now, some of you might wait for price to break this high and call it your change of character and then buy price. That is fine. Or we can use candlestick confirmation. We have a bullish engulfing candle in an M15 demand. So me being the risky trader I am, I would consider this as an order block, right? The bullish engulfing candle, call this the M1 candle, and then we can buy price from here, okay? So let's buy price again. If anything, we can expect price to pull back higher, so it makes sense to buy price. Again, if you understand where price is, where price came from, you can understand where price could potentially head to next. All right, so we're in this trade. Let's see how far this trade actually ends up going. Let me go back to the M15 and let's look for potential targets. Now, because price isn't breaking the M15 low and this trade idea is still valid, we can actually target the M15 high and call it our buy side liquidity. So we're gonna see how far price actually ends up going to. All right, so let's play this all the way through on the M5 so it could go quicker. And of course, there's going to be a lot of different entry opportunities as price is moving, and then you can get into these positions. In this case, TP would be hit. All right, so again, a lot of different ways of going in and out of positions. You just have to really understand where price is, where price came from, and and that way you can understand where price is going next. All right, it's a simple checklist I use all the time. Again, this first trade that we took around here, it played out, it never went all the way to TP. Again, if you managed the trade, you could have probably banked some decent profits. If you left it all open, you probably would have stopped out. But again, understanding price action and market structure should give you the knowledge and confidence to hop into the position again when it makes sense. All right, so that's the end of the video, and I hope this video truly helps you understand price action and how to read price, internal structure versus external structure, and then put it all together, get into your positions, and hopefully these positions play out. And even if they don't play out, it's all your probability gain. All right, get into the best positions there is, and in the long run, you should be profitable. All right, so I am peacing out, guys. Hopefully this video was entertaining and very educative for you all, and I hope you got, a thing or two out of it that you can implement into your next trading session. I'm wishing you all the best, and hopefully you have an amazing trading week coming up. Have a good weekend, guys. Take care. Peace out.